Thanks very much for watching On Point. Let's take a look at your markets now. Asian markets closed higher as market players welcomed a lower than expected US inflation print for October. This led some market players to be hopeful that the Fed will ease off the pressure on raising interest rates. If this happens, it will give China more room to also stimulate its economy, which has floundered on the back of that country's zero-tolerance approach to COVID-19 cases. Over in Japan, the Nikkei share average closed up 3%. Hong Kong stocks shot up on the day, with the Hang Seng Index registering an increase of 7.74%, while Chinese stocks rose, but not to the same degree, ending the day's session up 1.7%. All right, we're going to get some interpretation of what's happening on the markets. I'm joined by Charles de Villiers. He's the head of equities at Ashburton Investments. Thank you very much, Charles, for joining us. So that lower than expected inflation print from the United States has really given the markets a good boost. But the question is, will that sentiment last? Because, of course, this is dependent on speculation around what the Fed will do or won't do.
Yes, thanks for and welcome to all the viewers. Obviously, this was, I think, relatively good news given what we've seen over recent weeks and months. I mean, the print of 7.7 was lower than the expectation of 7.9 to kind of call it about 8, and the previous reading was around about 8.2. So pointing to maybe the Fed's further hiking from this point forward being more modest and more muted, and hopefully I think the market is probably making assumptions that the eventual pivot hopefully comes earlier than what they were assuming maybe a week or a month or two back.
Yeah. Now, China's growth has been hit really hard, due to its approach to COVID-19 and having a zero tolerance towards it. And we know that economy obviously needs more stimulation, and it's an important economy, particularly for emerging markets like South Africa, from a commodities point of view. What are your thoughts about that economy and how they're going to go about stimulating that economy?
Yeah, I mean, I think it's there've been a lot of mixed messages coming out of China over the last month or so, and I think that's been one of the main drivers of the volatility of, not only our market but global markets, but as you mentioned, particularly South African markets where there's a big commodity bias, and obviously commodities relative to other market segments have got a overly over-index in terms of their exposure to China. And I think what we've seen is that, you hear rumors of COVID measures being lifted and relaxed, and then the next week the officials come out and say, no, it's not the case, etc. And then the market sentiment declines, and you kind of in the cycle of, positive news flow, negative news flow. So, but what we're seeing at the moment definitely seems to be some signs of relaxation of these measures, the length of isolation, reduction of testing that's going on. And then, that's obviously flowing directly through into the sentiment around their economy and particularly commodities and commodity supply. So from South Africa, Australia, etc. So part of what we're seeing in the market today is around optimism around around the relaxation of those Chinese COVID measures.
Yeah. Charles, it would be remiss of me not to ask you to give us a comment on the cryptocurrency space. We know that a lot has happened with a major exchange basically on its knees. It looks like it's going to fall, and a lot of people are going to lose billions of dollars. Just tell us what your thoughts are around the cryptocurrency space. Do you think that people are going to lose confidence investing in this area or not?
Yeah, I must say it's not an area that I've had a lot of confidence in investing personally. Looking back over the last year or two, I think typically our valuation and investment philosophy is linked to valuing tangible cash flows that are coming back to investors over a period of time that provide intrinsic value. A lot of these things we've seen, I think, over the last year or two have been driven by lots of liquidity sloshing around the market, low interest, low to zero interest rates, and obviously what comes along with that is a massive amount of risk taking. So the NFTs you've seen in the market, the various cryptocurrencies, I think it's kind of really the chicken's coming home to roost, so to say. As the rates tighten and liquidity gets pulled from the market, I think you're going to see probably more of these sorts of actions happening over the coming months.
Yeah.
Is my personal opinion.
Of course. So let's take a look at a couple of stocks, or one stock because of time constraints. Richemont, they came out with results today for the 6 months ended September 2022, reporting sales up 24%, profit up 27%. Clearly, the well-heeled consumer is going out and buying luxury goods. Your thoughts?
Yes, there was a stellar set of results. I think there was leading up to this result, from what we gather, quite a bit of short action in the share, and you've seen a good set of results come through for the second quarter. And I think the big share price action we're seeing today may be a function of a bit of a short squeeze too, but also some good news in there. We've seen the jewelry maison increasing 20% sales in that area. They've had a good forex tailwind across most of their divisions. I think EBIT margin in jewelry roughly sitting at about 37%. Watches sales increased about 16%. So lots of spending on high-end luxury watches. Again, forex benefiting them there too. And with this positive performance across the group, the net cash position has improved nicely from cash flow from operations, and that's that a little bit of that's been invested in working capital. So obviously with supply chain issues and metal prices, etc., they've had to put more of that cash to work in working capital. But I think overall, stepping back from all of the detail, I think it's been a solid set of results from Richemont.
Excellent. Charles, we're going to leave it there. Thank you so much for your time and insights. Charles de Villiers, he's the head of equities at Ashburton Investments. We're going to take a break, and then of course after that, Diabo Sito will have SME on point.